Hello guys and welcome to another develop video. Today taking an in-depth look at Google, Alphabet Incorporated. It is an American multinational corporation and technology company focusing on online advertising, search engine technology, cloud computing, computer software, quantum computing, e-commerce, consumer electronics, and AI, most recently with Gemini. It is a huge tech company, of course. You probably have heard of it unless you live under a rock, and I think we should just start analyzing it. Their valuation metrics look pretty good. A free cash flow yield of 3%, a price to earnings of 19, and a price to earnings to growth ratio of 0.62. Their business metrics also look spectacular with an ROIC of 26%, return on tangible assets of 24%, return on equity of 41%, and a very good short-term liquidity with a current ratio of 1.84. Next, let's do Grant's valuation. Grant's valuation using a 2025 estimated earnings per share, an 8% growth rate, and the current yield on AAA corporate bonds of 5.29. We get an intrinsic value of 111.29, so a bit below the current price. Now let's go to the discounted cash flow model using an 8% growth rate and a 2% perpetual, followed by an 8% discount rate. We get an intrinsic value of $147, so basically the current market price. The current multiple of the past 12 months is 18, so well below the average PE over the past 10 years of 29. Their multiples valuation also looks pretty good. Compared to their tech competitors, they have an intrinsic value of $211 based on their average price to earnings. Now for the dividend discount model, putting in a 7.5% growth rate, so basically in line with their discounted cash flow, we get an intrinsic price per share of $172. Now for the output of all these four, we get an intrinsic value of $160.5, so a bit below the current price. But if we apply 15% margin of safety, they are trading above the acceptable buy price. But this is a great case study for why qualitative analysis is sometimes better than quantitative analysis. And I actually believe that this is a buy, personally. Of course, your own due diligence. I'm not a financial advisor. You should do your own research. But I actually believe this is a buy because their valuation is pretty good. They're not trading at a premium or something. They're trading slightly below the intrinsic value. And yet they have a great business, a growing business, a qualitative business. They've just started paying a dividend. They're in for the long term. So I believe that they actually have a set of qualities which Warren Buffett would deem worthy of a quality business. So a high growth long-term business. This is something that you'd like to own for decades to come. And I believe that as a value investor, this is a clear Warren Buffett play. If the stock drops even more, then that's even better. The only problem with Google, which is a pretty big one, is antitrust. Now, Google as a company itself, Alphabet, sorry, if it happens that this current antitrust case doesn't amount to anything, then they're very good for the long term. But for now, there is this legal risk, and the legal risk is pretty big, in my opinion. And if you think this will just be a slap on the wrist with a big fine, a few billion there, then you should invest. But if it isn't, and you believe that they'll break up Alphabet, then yeah, this is pretty bad, and I do not suggest you invest in it. But of course, this is why everyone does their due diligence. You should do your own due diligence, and yeah, maybe you'll buy, maybe you won't. I personally want to buy Google immediately as I get some cash. So yeah, this is my personal opinion. This has been it, guys, for today. Before closing the video, I would like to talk a bit about our affiliate for today, ticker data. So the template that I use today, you can see it here with the real-time financial data. This is ticker data. Also, ticker data offers many more templates and it's also pretty cheap. So I suggest you check it out in the link in the description below. Also, do not forget to check out my investing blog where I recently posted an article talking about the 2022 crash compared to today. I hope to see you in the next video. Bye.